Welcome to Markets Now. I'm Michelle Rook along with Vince Boddicker with Farmers Trading Company, and a mixed day in both grain and livestock futures trade. Over in the grains, we had row crops lower, wheat to the plus side. Soybeans the real drag though, Vince. And let's start there because pretty good rains over the weekend. So the market mentality was to take weather premium out, huh?
Definitely. And you look at, I think at the time of year we got this in as broad an area as we got it on, we could greatly change that crop. I've seen anywhere from 5 to 15 bushels an acre. 15 may be a bit of a stretch in there in those areas where it was dry. But again, great rains. And again, I think we're going to rain makes grain. That's going to keep up in the amounts we have. Should keep us going for the next couple of weeks if we don't get any more.
So we did hold the 100-day moving average from a technical standpoint, Vince. Do you think that holds here at least till we get through this WASDE report or not?
I think depending on if we get any other news and what crop conditions continue to be in here, we're going to continue to slip. I would think after the rains, we're going to build on those and look better. But I wouldn't think we're going to hold a long time. Maybe we can do it till see what the WASDE does in case there's any surprise there.
Yeah, and then the corn market kind of followed soybeans, but then was supported by the fact that the wheat market was a little bit higher. So a little tug of war there today, huh?
Definitely. Again, held in some areas we thought they may early in the day, and was surprised we did get the recovery with the rains. But again, I think we're still lacking demand in there. Maybe a bit disappointing when we look at the beans and the corn also from the flash sales that we had on Monday morning. Nobody really cared, but I think it was more computer generated and psychology of rain of let's sell and not worry about what else is fundamental going on at the present time.
Does that at least indicate, Vince, that we're getting down to levels from a price standpoint where we are starting to be a little bit more competitive?
Well, you got to believe you are. I'm still thinking we're not where we want to be when we're looking at Brazil from a corn and bean stand, just because of the numbers they have. I think their bases are significantly wider than us, but at least it'll make you look at it. The sales to Mexico were there, which is close, makes sense. The ones to China on the beans maybe surprised me a bit in here, but is it that China wants to get a little bit of diversity on where they're getting it from in case there's some shipping problems coming out of Brazil?
What's the market thinking about yield? Do you think this rain at least gives us the idea that the crop is starting to stabilize a bit on the corn?
I think you're stabilizing pretty good. I think there's varied amounts of anywhere from 171 to 177 that you're going to see, and you're probably at the higher end of that with rains we've had the last 3 weeks. But the market, I think, again, is going to wait and see over the next week or so what things look like. And as you noted, what the WASDE says on reports, if we don't get any big decreases in that, then we're probably going to try to move it lower.
And as far as technically, the corn market really needs to hold the July lows here, right?
I think, yes, I would agree with you on that. I think those are important. Otherwise, you have some free falls. Where do you go? You could easily go to 440 to 460 in that December. Maybe it's more than that, but that is a bit disheartening to the producer out there after what we've seen the last year or so.
And what about the wheat market? Wheat obviously spilled over, gave the corn a little bit of support, but wheat market putting in a little war premium. We don't have a lot in there though, do we?
Not really. I think when you look at late last week, we were putting new recent lows in that wheat market, especially in Kansas City and Chicago. Not what you think you want to see if you're worried about being able to source grain out of the Ukraine. But I think as we looked at last week, we also talked about an agreement between Ukraine and Crimea of shipping out of there. So takes a little pressure off of that. You saw some other European ports they talked about being able to get it from, and then some conflict there later in the week. And the other one is you look at the China situation coming out of Russia for wheat. One has to wonder if they're not more concerned about getting Russian oil than they are Russian wheat, as they have some other sources they can get wheat from.
Yeah. And then the dollar was higher today, and we really haven't seen a lot of great demand coming to the U.S., have we?
No, not really. And I think for the most part, if you look in that eastern region in Europe, Russia is definitely cheaper than the U.S. is. And no matter who the end user likes or who they don't. They seem to always want to go to that cheapest source.
Cattle market ended lower on the day. How much of that was just profit taking? Because feeders did go up and make some new highs again.
Um, Feeder cattle, I think when you got up to the new highs and they didn't follow through, one has to wonder if it didn't intrigue some hedging in there, and really no buy orders below the market is what my guess is. Live cattle market, as you and I discussed before, maybe it was something of the nature of unwinding of cattle and hog spreads. We know there's some discount in the hogs, but the cattle got a big premium. But again, the market feeling a little tired, but cash a buck or two higher last week in the fed cattle, I think had to be a pleasant surprise to the market. But the market's still wondering, can we hold that premium this week?
Yeah, it was a little disappointing, I guess, to see the cattle down, considering we did have higher cash trade. But to your point, certainly the cattle hog spread relationship had gotten pretty darn wide there. So the hogs was part of the bounce there, as you pointed out, because we're at such a discount, especially in those back months to where the index is, or was it just some short covering?
I think there was talk about that one saw, but again, one has to keep in mind, even if you're looking at October, that's still almost 2 months out, and we have plenty of time to bring things together. And I think over the next few weeks, we will see cash start to decline as it does seasonally. And we really have to wait, I think, until the end of September on that pig report to see if gilts are being retained after big sow slaughters of these past couple of weeks.
It's been surprising to watch from the May 31st low until today. You have seen the funds swing from being record short to almost record long. I don't know if I've ever seen that in that hog market.
And I don't think I have either, but I think one has to realize that as we move along, we have more of the algorithm traders doing more of that volume, and they can make some big swings and look at things differently than the general trade does, and they are the volume.
Yeah, that is very true. All right. Thanks for joining us, Vince Boddicker with Farmers Trading Company, and that's Markets Now.